you got to give a hand to the Bulls. They took out the pair of highs. They got us moving towards 5,600. And they got SMCI'd, bringing down the tech, mixed earnings, and a lot of earnings to cover in a lot of different sectors. Joel Kulina is going to take a break from his busy day to talk about the markets and earnings. I'm back, folks. I'm feeling good. I'm fired up. It's pre-market prep on a Wednesday. Let's get it started, Brent.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, market had a good day yesterday, as I mentioned. Got SMCI'd. We're down 19 handles at 55.65. Off the high from yesterday, not that far off the low of the session. The buck crawling back up 20 cents, 99.22. TLT, that's a nice rally, back over 90 bucks, up 22 cents, 90.42. USO continuing to wither, down 23 cents at 65.62. GLD taking it on the chin, down nearly $4 at 302.10. SLV, well, 30, couldn't hold 30, down 52 cents at 29.31. And Bitcoin flat at just about 96,000. That's in the futures. Triple D, let's bring him on. Triple D, let's do quick sports. Go Oilers, go Pistons.
Solid wins last night, both teams. Late night for me. Didn't get to bed till after 1 o'clock, so tired this morning. These West Coast games killing me here. So Oilers up 3-2, Pistons down 3-2. Can they both pull it out?
I don't know. Pistons got to win their first home playoff game since the financial crisis. But you know what the worst thing is, and will be the last thing on sports until I mention it again, is that the games are over, but then you're still pumped.
I know. That's exactly it. It's hard to go to sleep after the game's over. You get the adrenaline going, you're watching. It's hard to just fall asleep. Like, oh, the game's over. 2 minutes later, I'm just going to go to sleep. Just, almost impossible to happen. So, yeah,
okay.
that's the issue. Bill, I need to start napping before the games. That's a good call. Like, maybe go to bed
who
at
can nap?
8. But I have to trade. I mean, we got trading going on here, too. Like, I trade all night. So all I do is work and watch sports pretty much right now. That's it. That's my life.
Yeah, and you're pretty much wrong at everything.
Sometimes.
Okay, so nice day yesterday. The Bulls are saying, I don't care about tariffs. I think earnings season's okay. I think everything is fine and dandy, right?
Yes. That's the Bulls. Nope. Like, they buy the dip on everything. Yesterday, dip gets bought again. I thought we could get some follow through because I thought we were having a little bit of a deal tantrum where Besant didn't announce any deals and just talking about talks. And, the market sold off about 30 handles because just talking about talks. But the underneath demand here is real. The money managers who have missed the bottom are real. And they are using every dip as a buying opportunity to come in here and start to rebuild portfolios. So yesterday, 30-point handle, they're like, please and thank you. So buy the dip hat for me still on as well. Now we keep getting bad news here though, because, and we should probably start here, probably with SMCI, which you have on screen, because we didn't have them scheduled. Although Brent in the STM room was obviously all over this because he talked about how SMCI typically reports around here, but they weren't on the official schedule. And then they drop a bomb. So they come in and they lower guidance, and they lower it substantially. So they lower Q3 adjusted guidance from 46 to 62 down to 29.31. So they basically cut their guidance down like by 40%. Even worse, they lower Q3 EPS guidance. Estimates are way up at 49 cents, down to 16 to 17 cents. So just, serious guidance cut. That took down all the chips. That took down, first thing it took down was Dell, because Dell is obviously sympathy play. So you saw SMCI go down $6. Dell starts falling. And then Nvidia falls out of bed. Nvidia was 109, 108, 107, now in the 106 handle. So once Nvidia goes, then the whole market starts going down. But that's your catalyst, really, why we're down here this morning. It is completely on SMCI. We were holding up very well, even after the SMCI debacle. Even after the SMCI debacle, we were talking about it, and the S&P futures are down like 4 points. And I'm like, how the hell? How is it possible that the S&P futures are only down 4 points when Nvidia, all these chips tanking, Meta's down because of Snap? I'm like, we got some major components down pretty serious here. So I did take and short some SPY, and it worked out very, very well. I actually hedged it with Burke.B long because I figured Burke would hold up well. So that trade's working out really well so far this morning because Burke's barely down and SPY is down 0.41%. But I mean, so resilient even on the SMCI news. Are they going to come back in and buy these stocks again? Who am I to say not? Because we're now in this market environment where they're accepting. It seems like they're more accepting of a little bit crappier earnings. And if that's the case, as we get into obviously Meta and Microsoft tonight and Apple and Amazon tomorrow, if they're going to be more accepting of like slightly lowered guidance, it's going to be hard for this market to go down.
Okay, so you covered a lot there, as usual.
Yeah.
So how did you see it? How did you play it? Did you have time? I mean, that is an ugly looking bar. I'm showing a 15-minute bar, right? So the algos are quick. I mean, was it an easy thing to catch that SMCI?
No, you can't. So SMCI is instantaneously down. So you're never going to get, if you're trading these things after hours, it's not like, oh, SMCI is bad news, I'm going to short at 35 or 34. You're never going to get that, but it's your leader. It's your information. So now you have information to trade everything else. I was able to get short Dow, and I had a really good trade on Dow in the STN room as well. So that, I made $3.50 on it. So that was really good. But, I'm just saying overall, when you see Nvidia and all them tanking, the S&Ps are holding up. The SPY really lagged last night, folks, like big time. Bring up the SPY. It did not want to sell off. It was so reluctant. It was like, the school, it was like your child, you say, go to your room, you're being bad, and they're reluctant, they don't want to go. That's really what it was last night with SPY. But finally, it started to sell off here overnight. So, I mean, when you get Nvidia, and obviously Meta, which we haven't even talked about yet, down substantially from the overnight close. Those are two major components in the S&P. So eventually it should succumb, and it did. But it was like a half an hour before SPY really started selling off, which is crazy. So these things
Doesn't that make you doubt that it's going down?
For sure. That's why I hedged it with Burke, because then I said, look, I'm sure it's SPY. It isn't going down. I'm going to go long Burke against it because I think if this market goes up, it's going to be on the back of value stocks tomorrow, because I think tech's going to stay down because of SMCI. So like the chips are going to be down, and then, Meta's already down. So there was no other catalyst to really bring tech back up. So I was just, of that opinion that if we rally, it's going to be on the back of value. I'm going to say that again. It applies right now. If we rally today, it's going to be piggybacking off of value stocks, I think, unless there's a complete reversal at the, open, which sometimes happens. But right now, for for the SPY to be holding up as well as it is, there's going to be some rotation, some wicked rotation, and it's probably going to be in the value names.
And also, I mean, it doesn't necessarily, and when you're saying that, you don't necessarily mean that like the market's going green and all these value stocks are being green. You're just saying that they might not be down as much as the market.
Or they might actually go green.
Okay.
Because if S&Ps want to be down, like it's just math, right? So you have to add it all up. So, when you've got Nvidia trading down, and I'll just bring it up here right now. You got Nvidia trading down 2.48%. That's a pretty good haircut on the S&P. Then you probably got, and you can look at the Qs, and the Qs are down 0.74%. So you can clearly see with the Qs down well more than SPY, there's going to be some stuff in the SPY that is probably going to be green to hold up the market. So I naturally think, what are they probably going to buy? Probably not other tech stocks. So it's always this value versus growth thing. So logically thinking, I'm thinking, some of the staples are probably going to be green, which they are this morning. Some of the drug stocks are going to probably be green, which they are this morning. Some of the, maybe value names could be green, which they are this morning. So
all right, let's go.
I don't think it's a matter of like, maybe, if they're flat, that's kind of good too. So if they're only down like 0.1%, that's holding up well and helping the SPY out too. But I mean, it's just all math, because the arbitrage component really only works like, when you've got obviously your market makers and, they're doing all the arbitrage between the index and the actual SPY or the futures, that and the stocks, that only is fully working at 9:30. In the
Right,
pre-market, it's a
liquidity.
bit of a guessing game because there's so many stocks that just aren't trading actively. There's just so many stocks that just, don't have much of a market at all. Like once you get outside the top 100 components of the S&P, you're really guessing at that point in time. Like you can go to these lower components and there's like not a lot of bids, not a lot of offers, not a lot of action on them. So it's a little bit of a guessing game, from the arbitragers. There's still some arbitrage going on, don't kid yourself, but it's not a perfect science. That's where we can have an edge, is figuring out, well, what's going to be stronger probably to make up the difference. I'm telling you right now, I think it's probably value.
Okay. We only have a couple minutes to ADP, and we've done one earnings report, or there wasn't even an earnings report. It was guidance. But
Yes.
is this deja vu all over again with Snap? Remember, maybe it was about a year ago. Snap came out with earnings ahead of Meta, right? Meta hasn't reported yet. Am I correct on that?
No. So Meta last quarter, I believe, reported before Snap. So Snap didn't matter. But Snap reports now the day before Meta. So now Snap matters to the overall market because if it brings down Meta, then it can bring down the SPY. And that's kind of what it's done here because if we look, Snap is getting absolutely crushed and Meta is holding up well, only down 1%. I would have thought it'd be down more than that. But maybe because we already have Google and Google was fine, that's helping to hold up Meta just a little bit more.
All right, Snap misses. They lost 8 cents. Well, no, that's not bad. They were supposed to lose 13. They lost 8, and they beat on sales here. And they beat on users beat. What the hell did they do wrong? It doesn't share guidance. Oh, no wonder why. People are worried. How the hell does tariffs affect Snap? I don't know. But anyways, Mr. T was all over this one in the STN room.
Killed it. Yeah,
He
killed
killed it. He killed it. He wasn't
A
Dennis.
pity the fool who was long Snapchat.
It's not
Mr.
bouncing.
T, not bouncing. No bounce to be had. It's just been a steady leak in Snap all night. Somebody came out and was selling 500,000
No
shares
way.
after that report. Like threw it out there, like going it. Like we're selling 500,000 shares here right now. We want out of this. And that was like, it originally popped too, like, because it went up. It originally actually popped, if you look at the chart, Joe, quickly to $10. So,
Yep.
and then they pulled the rug out from under it just as quickly. And then it started trading down. And then at that point in time, somebody was really getting aggressive. They came out to sell 500,000 shares, like 840. Then they went 830. Then they went 820. And I think they kind of got done on some of them there, but, continued to leak after that too. So,
Did you
Mr.
test
T,
them?
great trade.
Did you test them with 100 shares?
See, you buy 100 and see if they all go.
Yeah.
They'll
Did you?
test their shares. No.
Do you know what 500,000 would be on the floor?
What they called that? No.
You would. Okay. I've never seen an order that big. The biggest order is to sell 1,000. Sell 1,000 in
That's
market.
because it's the S&P futures, so it's
Yeah,
big money.
Yeah. Sell 1,000 at the market, and there was this one guy, no names mentioned. His name is Paul. He would say sell 1,000 at the market and hurt it.
I heard it. Sell
It would hurt
1,000
it.
market and put the pain to it.
Yeah.
Funny.
Yep. Yeah. I've seen those orders.
I love
come
the
on
floor
before.
signals. Brentster's here. He's going to give us the ADP numbers as they break here. So ADP is coming out right now. We are going to move. S&P futures are leaking slowly.
ADP, a big miss, 62,000 jobs. Economists were looking for a reading of 114,000. A huge miss on ADP. A little disclaimer here, ADP is not necessarily the biggest market mover. However, it is very nice to get a little preview for Jobs Friday, which is going to be this Friday in a couple days.
Oh, recession. We're in a recession. Oh, my God, we're in a recession. We're not adding jobs.
Recession, and the market is still very resilient here, but there's been a lot of bad news coming out here lately, like little pockets of bad news. So can the market continue to shrug off, the uncertainty, companies not giving guidance? Can they continue to do it? Maybe, but it's going to matter. What's going to matter and dictate the next wave of buying or selling? It's going to be Microsoft and Meta tonight. Really, this is all noise. ADP's
Yeah.
noise ahead of this. The earnings reports we had this morning were mostly noise. Obviously, SMCI mattered and brought down the market a bit. But I'm telling you, Meta and Microsoft tonight, it's all about Meta and Microsoft.
What about
What do they
Apple?
say?
What about Apple? I mean,
That's small. And Apple and Amazon the next day. So you're
well,
in
I
the
mean,
heart of earnings season here now. This is it. This is like the heartbeat of earnings season, the next 4 days. Next 2 days, sorry. Next 4 companies.
yep. Okay. All right. So Dennis, do you want to stay with the bad or do you want to do some good?
I love good.
Or-
We can talk some good. Let's talk
We
up the
can
market
talk
a little
good.
bit. Money
Okay.
Mitch wants to talk Caterpillar. Money
All
Mitch
right.
wants to
All
talk
right.
Caterpillar.
Buddy, hey, Money Mitch, how you doing, buddy? We're gonna have Money Mitch in the STN room on Friday, so you Money Mitch fans could be there, and he can give us his recent take on the markets. Okay, Cat does not go splat. Cat, well, now here we go. We missed 425 versus 435, a double miss. They miss on sales by a little bit, 14.25 versus 14.66. Huh. I guess it wasn't as bad as everyone expected.
This is what it is. We're at low bar matters here. The bar matters. And Caterpillar is sitting down here. It's lost 100 points since January. And everybody's like, oh man, no company's going to be buying big ticket equipment stuff. Actually trades. And if you look at the chart, Joel, it comes in and trades down on the initial report. Just for
Way down.
the brief. Well, how low did we get?
Holy Toledo. Holy mackerel.
Yeah.
This went sub 300.
Yeah.
289.79.
So this thing was down 18 points this morning. And now you get the big, huge earnings reversal. You catch all those people short and going up. The bar matters so much. So I'm saying it again. And we've been spoon feeding some people here. I'm telling you, man, like this bar thing, Jay Rice been talking about it. We've been talking about it nonstop. The stocks that are sitting down not too far from 52-week lows are going up on bad news. The stocks that are sitting up near 52-week highs are selling off sometimes on good news. So there is a trade, I'm going to say it again, all you hedgies that listen to us, to just be long every stock going into reports that's trading near the bottom of the chart and being short every stock going to reports that are trading near the top of the charts. It's been working. Nothing works 100% of the time, but that works 55% of the time. You'll make a lot of money with that strategy. So spoon feeding all you hedgies out there and you traders out there. Caterpillar is another example of this. Stock disappoints, but the bar is so damn low that it rallies anyways.
Okay, I have a bad tendency when I see stocks like this to say, "Oh my gosh, it's just up $12, $11.5. You just got to hit the bid." But I'm going to be a little bit more patient on this one and say, okay, the pre-market high is 319.85. We haven't been at 320 in a while. Maybe there's some paper at 320. You take out the 320, la la la, but then you get to 324. 70, let's call it 324.75. That's your daily high from April 3rd. A lot of people getting a lot of money back from that day. That was Liberation Day or whatever they call it. You also have the 50-day moving average lurking at 323.50. So, hey, if that's your target, that's your target. Take it within that area. If you're looking for a gap and go, or at least for a gap and go for a couple days, because we've seen that, maybe do that. Just don't get SoFi'd, okay? Just don't get SoFi'd. That's the only thing I have to say. If you get the big rally off the open, you're looking great. You're going with the mo. And the other thing about SoFi is that it had the market kind of going its way. And they came in with their selling shoes on. So that,
So I'm going to spoon feed the hedgies farther. So the moves happen and you got to take the money and run. So two things are true here. One, we've seen companies rallying on bad earnings that they've been trading near their 52-week lows. We've seen companies sell off. They're trading, and have good earnings that they're trading near their 52-week highs. We've also seen so many earnings reversals that I'm not chasing whatsoever, not chasing anything. I mean, look at RCL. yesterday, and we
Oh.
talked about it. And Christian asked me on the show. So RCL was trading up $5, trading on their earnings report yesterday. And he's like, and Christian was just asking me, he's like, "Is this one you jump into?" And I was like, "No, because we're in this still take the money and run type of market. And the stock that goes up 5% doesn't often go up 10%. A lot of times it gives it back. RCL, great earnings, reiterate the guidance, did everything well, and the stock goes red. So that's just the type of market we're in. It's still contrarian dream. Yes, folks, this market is a contrarian's dream. Even when we're drifting higher, we have so many little wicked pullbacks here too. You know, like there's little wicked sell-offs. So I still think you're in the take the money and run market. When you get a pop,
Oh, we got
nice
another
pop
leg
on your
lower
stock.
here. Another leg lower in the S&Ps. Do we have news? Yeah, we have some joker talking about tariffs on TV. We just made a new low in the S&Ps. There we go, 43.50, 44. Just made a low of 43.50. That's a new pre-market low. If you're prone to be trading a range, right there, we just made a new pre-market low. News me. Do we have news on this, or is this just another 10-point down move in the S&P?
Who knows, Joel? It's as a job, it's so hard to like continuously be all over the news because we're so sensitive. The algos are so sensitive to anything. It's like, okay, we got to go know where every single person that's in this administration is speaking here. It's not even just about Trump, because Besant tanked the market yesterday with his commentary. I mean, Lutnick can move the markets with his commentary. You know, like you don't know who's shooting their mouth off anywhere at any point in time. So it's like, you know, again, you know, just the trickiest market to trade from just using just technical basis here, because there's a lot of whipsaw actions just happening from headlines. It's a headline driven market, and it's going to be that way for a very long time. Get used to it. Get used to it.
Yep, Frank mentioned, what was that movie where Frank, it was Martin Short and Steve Martin. It had something to do with weddings. Remember that? They did a couple versions of it. Come on.
You're going back to like the 19th century.
No, I'm not.
I guess
I bet you someone will get this in the chat within 3 seconds. It had Martin Short. Do you know who Steve Martin is?
Yeah.
It was Martin
Remember
Short.
the Three Amigos? They did the Three Amigos
No.
probably around that same time frame. That was a great movie.
Father of the Bride, Patrick Watkins.
Oh yeah.
Thank you.
Father of the Bride.
He mentioned Spotify as another stock trading up there.
Yep.
Here.
Same story. Same story. Stock reports again near 52-week highs, and they punish it. Now it did bounce back. So again, just like we said, take the money and run. So if you're short going to that report, you get the initial 50-point sell-off. You say thank you very much, and I move out because they do come back. You know, Netflix was kind of almost the same way. Netflix was awesome quarter, by the way. Just an awesome quarter, and it wanted to go up, but it struggled so much to go up. And then finally, you know, it succumbed to the buying pressure.
It did.
The quarter was
just
that good. But I mean, even that didn't want to rally on the initial. It wanted to go down. Like everything in its power wanted to bring it down. It just couldn't because the quarter was just too good.
Well, you know what the Netflix thing was? Is they did it on a Thursday before a Good Friday, you know, before. So like the option players were kind of scratching their head. It was, you know, because you didn't get the move. Normally you would get the move on Friday, but because of the Good Friday holiday. So it was kind of weird. Someone heads up to the Netflix PR department. Don't report earnings on a Thursday when the markets are closed on Friday. It's not fair to options players playing the weekly.
Imagine Netflix actually would have reported earnings like in a normal time frame. That probably would have been a lot better. Like people just were already on vacation when it reported. So true. They really screwed up that earnings report. You know, not realizing that the Friday was there, and they're the only thing that was reporting into the Good Friday weekend.
Can we go off the board here for Johan Sven? He's asked if we covered Visa.
No, and Visa was trading up the entire night, and it has succumbed here as well. So as much as we keep thinking the value could rally today, well, now the S&Ps have gone down so much that you got to start thinking about like, well, it's going to start dragging down more things too. Like now we're down 40 handles. Now it feels like, hey, now we're pricing in some stuff. That's what it feels like to me.
All right, let's real quick for Johan. Welcome, Johan. I've seen you in the chat before. Welcome to Pre-Market Prep. They beat. Man, these headline guys are getting crushed, Dennis. 276 versus 268. beat on sales, 955 versus 955. Guidance. Oh, I'm not seeing any guidance coming out of them. People are still spending, but I think a little recession worries here, a little worried about the consumer. Did you see the statistic on travel to the U.S., Dennis, in 2025 from foreign countries? Did you see
No.
that?
What do you got for me?
Oh my gosh, I wish I could find the tweet. It is absolutely falling off a cliff.
Travel to the
Absolutely.
U.S.?
Yeah, travel to the US from foreign countries is absolutely taking a dive. Let me see if I can let's see if I can find
And
this.
we've been talking about this. We've seen various, and obviously people, know who's compiling data and where it's coming from. But we've seen, the Financial Times reporting this. We've seen, some other media reporting this. I had boots on the ground. I can tell you, it's definitely coming from Canada too. Like there are less Canadians traveling to the U.S. right now. Like I don't know if that's going to last, but there is a lot less because, like I said, boots on the ground. When I was in the Tampa airport, it was absolutely packed. When I was in the Toronto International Airport, it was dead, like completely dead, Joel. I went up and we walked right through like security, checking her and just looking through and walked right up, to the customer service, walked right up to the guard, right up, like not one person ahead of me, like nobody was there. I was like, holy, I've never seen it like that before. So boots on the ground is, I do believe there's some truth to this international traveler not traveling to the US as much right now. I do believe this is true.
Okay. All right. Let's go with and sticking on this theme, let's go with more bad. Let's go to the consumer. I mean, it's not a bad report. Once again, if you're Algo and you took it up on this, let me go. Where is my bookings report? BKNG reported after the close. Oh, la, 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 2481 versus 1730. We beat on sales, 4.76 versus 4.59. They don't know. They don't know, right? What are we going to do? What things are good now? Pull forward. We talk about pull forward with the transportations and everything. What if people just getting their trips out of the way, right? We don't know what's going to happen with tariffs. We don't know what's happening with the dollar. Tough stock to trade because of its price. No stock split. Are you tempted to buy? Well, they already did buy the dip. They
Yeah,
did buy the dip.
they did a little
Yeah.
bit.
I'm
Again, this is that, but that sheet that you just showed me there makes me not want to own Booking right now. So maybe Booking earnings were fine here. Maybe the guidance is fine here at this point in time. And obviously domestic travel, there's still lots of domestic travel on Booking. Was a lot of international travel there too. I'm just staying away from that at this point in time because the one issue we do have, we can keep saying, okay, there's underneath demand and money managers are underinvested. And yes, they missed it. But there's also, an issue here where some of this stuff is real that's going on behind the scenes. Like tariffs are going to be real. Even though the Amazon story was fake yesterday, did you see that? The Amazon story being fake? Amazon
I don't
denied
know.
that.
Bezos came out and I don't know. I mean, he's
Can you believe though, like that was flying around and everybody's talking about it, even to the point where Bessent mentioned it in his like conference call, and Amazon denied that they were going to put the tariffs on the prices of the stuff. So I mean, this is where we're at too. Is we're in the information age, but we're also in the disinformation age, where there is just so many lies, coming from all over the place. Stuff just absolutely made up. But do we just get a number? Because we're really bouncing around here. Do we just get a number?
GDP. GDP must be
GDP preliminary reading for Q1 down 0.3. Economists were looking for a 0.2% increase, a worse than expected GDP. We have this is again the preliminary reading for Q1. We are going to get 2 more readings for this Q1 GDP data point. I believe 1 more in May, and then I think 1 in June. This is only our first reading, but again, sharply worse than expected, I would venture to say.
Market is rallying on it, believe it or not, though. So this is like where we're at. What is good? What is bad? These economic numbers, you have them ahead of time. You don't even know how to trade them. So sometimes they pop on them, sometimes they drop on them. But at this point in time, we're rallying just a little bit on this. The market wants to go higher. There's just so much bloody bad news here overnight that it's struggling with it. And that obviously bad news is, that entire tech sector is down heavily.
There you go.
Snapchat and SMCI, but.
Dikembe Mutombo raises his finger and says, lower interest rates now, right?
Well, we're back to that.
Yep.
We're back to that.
We're back to that.
Yep. We're back to, okay, that is good because that's going to make the Fed move sooner. So we're back to that. We're back to glass half full market. So here is just simplified analogy for all of you. We were in a glass half empty market for the whole beginning of April, where they were selling off, no matter what, because they were nervous about tariffs. Now we're like, the money managers have missed the bottom. They're scared, and we're glass half full. Oh, those earnings? Well, the Caterpillar earnings weren't that good, but you know what? They weren't going to be that good, so we're going to buy it back anyways.
Oh my gosh, we need an emergency cut right now, Dennis.
We're selling
We
off.
do. Powell does not know what he's doing. We need an emergency rate cut as we speak. S&P's heading for Monday's low. We need an emergency Fed meeting at this moment to cut interest rates.
Yeah.
And I agree with Mitch. Mitch says, man, rate cuts. I don't think they're going to do it. Oh, my Lord, we're falling out of bed. Dennis, cancel your bids. What else? Is someone
we're in a contrarian market. You want to be buying into that panic.
I don't want to buy this.
So
I'll buy Monday's low. You can buy it.
There when we're just tanking. I want my bids out there when we're just tanking. You got to bring the stuff in.
Go ahead.
Come on in. Come on in. The water's fine.
Come on, because you're short from last night. I mean,
I am short, but come on in. Let's get some coverage here. 1%. What a gift last night. What a stupid market. Whoever thinks this market's efficient, you're wrong. Sorry, you're wrong. This market was trading down 4 points after all that news was out last night, and now it's down 50. I mean, what a gift last night. Just, and obviously I hedged with Burke, and Burke's holding up. It's only down 0.22%, so that's working out really, really well. But I mean, this is just a gift. We're just in this market that just keeps on giving gifts.
Okay, let's go to one more bad report, and I don't know if I'm gonna like, before I actually say it's a bad report, who knows? And I'll do my Starbucks rant afterwards. But Starbucks, 41 cents versus 50 cents, miss. 9 cents. Sales, miss. Not that much. 8.76 versus 8.86. I guess those tariffs on coffee are starting to have a big effect here. Starbucks trading $8.50 lower. Dennis, I know you are just dying to buy the dip in this one.
Oh my gosh, it really got hit here. I absolutely hate Starbucks since birth. So I've never understood why the stock just keeps going up and up and up and up and up forever. So it's this one I just don't talk about anymore because I always get this one wrong. Whenever I think this is the time that they're actually going to stop buying $10 coffees. They just complain with their $5 coffees, like $6, $7, $8 coffees in there now. I mean, it's a drink. I'm like, what world are we in where we got to go pay $7 or $8 for a Starbucks coffee? I mean, it just seems, I used to complain when they were $3 and then McDonald's had them for 99 cents. I mean, it's always had the premium. It's the experience, I guess, of Starbucks. My kids like it, but I go in there and everything is just so expensive. So I've been wrong about it.
A quick, oh boy, I will say that, and I'll just, I'll give you a range here because this is probably outdoing the expected move. I'm not exactly sure, but pick your poison here between, I'll call it like between 72 and 78. Because you have 3 monthly lows here. So I'm not saying that's the all be all for support here, but I don't know. If I had a big short on and I was looking, I'd say, okay, can you hit me at 75? Okay. Can you hit me with more at 74? Oh, I'll buy a ton at 73. 72, I load the boat, not investment advice, but I'm not shorting it down $8.50, no position, but 3 monthly lows, flagging the $75 area in Starbucks. Okay, we got a really good guest in the background here who is in a ultimate fast market with earnings. So we're going to bring him on right now. We're going to do just a rapid fire session with him, get him off real quickly. Brent, run the intro. The man with the greatest first name on Wall Street, Joel Kulina, managing director, Wedbush, technology, media, and telecom. You're on mute. We got you muted.
Does that sound better?
Yeah,
Yeah,
you're good now.
perfect. You're
Good now.
perfect. Put that headset back on.
Yeah, it's weird. All right. Anyway, guys, good to be back. How's everyone doing?
Good. Did I get it right?
Yeah, you nailed it.
Okay. All right. I know you're super busy, fast market over here with all the earnings. Just start with some highlights, some lowlights, and then what you're looking forward to.
Yeah, I mean I'll tell you what. I think Nasdaq and the markets yesterday was its sixth consecutive gains. So there's a little bit of a shock this morning, right? Yeah, right now Qs are down 1.5%, and here we are. Super micro is really the big story. It dominates our conversation since last night, down 19%. We know they were in that fraud bucket not too long ago. It's been a disaster since they were included in the S&P 500 about a year ago. But this is a very negative read across for the entire AI complex, and it comes on the heels, unfortunately, of some really good commentary, especially from the power side of trades. VRT sounded great, GEV sounded good, Siemens Energy raised their full year guide last week as well. But super micro, they're seeing some slowdown, and again, this is definitely a negative read for Nvidia. And again, look at that chart of Nvidia, down 3% as we speak. It's been making lower highs since it peaked back on January 6th. And the stock's still struggling with where's the incremental buyer in some of these once mega cap tech stocks.
I'll be specific here to SMCI, and I know you had the short reports, and I still don't know. Have we heard from BDO yet? But doesn't it seem, just from your experience on Wall Street, once there's a negative news flow, that it's just, I don't want to say it's impossible to get out of it, but just, and then the company, keeps confirming it. I mean, doesn't it just kind of like, I remember Dennis had a long with it, a small long, he had played it, he got out of it. It just seems like you're just fighting such a long-term trend. When they just come out with the bad news, it takes so long for them to turn it around.
Yeah, exactly. And, I think also look at AppLovin. I mean, talk about a once darling stock, and then I think it peaked, it hit $525, I think after hours back on Valentine's Day. I only remember that because I think I had a client dinner, or would have been that week. But that stock's down 15%. It's negative Edgewater checks this morning is what's driving that stock into a free fall. But again, another name that's been the target of multiple short reports in 2025, and there's just not much support air cover for these type of names, especially given the rally that we've seen off the lows, just three weeks ago.
What about the consumer? What about the consumer bookings? Good information here, good earnings, unsure of things. We saw what they did to Royal Caribbean or Royal Rug Pool here. Talk about bookings and the tell for that in the market.
Yeah, I mean, I think you guys were discussing it earlier, and I think most Americans are sort of underestimating the impact of Trump 2.0 on the economy, the ripple effect, whether it's in Arizona, New York City area, Florida. Like, there's a lot of snowbirds, especially from Canada, that are dumping their Florida properties. Call any realtor in one of those hot cities. They'll probably say 8 out of 10 properties are coming from Canada. I know my in-laws. I live in Canada. I'm American. But there's definitely a lot of anger, and in Europe, I pick up the same stuff from some, friends of mine over in London as well. And people are going to find other places to go. So that's, I think, another lingering kind of a ripple effect of all this, rhetoric is how does this impact, a lot of these huge economic, GDP states in the U.S. Moving forward. But yeah, it's weird. Last week was I think the earnings painted a more optimistic backdrop of the economy. Guys were people were managing the tariffs and the uncertainty, and it feels like the past 24 hours or so, it's fallen off a cliff a little bit. So like look at Snapchat, right? And obviously Snapchat is one of the worst stories in tech, but down 16%, seeing continued deceleration. And that's obviously they pulled their guide just in respect to how macro conditions, they may evolve in the months ahead, but they just have no really visibility. And so you're seeing names like Pinterest, Meta, the Trade Desk, Roku, all the way down, just down, anywhere from 3 to 5% in sympathy.
When, Joel, do you think the market, because again, we can say, there's all these worries and we see some numbers here happening, but when I look at the SPY, not looking at today because we're really falling out of bed here right now, but when you look at really the SPY, we're kind of back. Got almost all the losses back from Independence Day. Like we've come all the way back. Is this just one of those fabulous selling opportunities in the S&P where it's not priced in any of this? Because before, we were drifting down. We had, maybe basically the tech bubble burst of last year and a lot of stocks, high flyers, valuations coming in. But we really didn't start selling off substantially until Independence Day, a 560 spot.
Yep.
When we're all the way down to 480, we come all the way back down up. We're 555. So we basically got all the losses back from Independence Day. Do you think like this is just one of those good selling opportunities where the market just is not pricing in a lot of like risk here?
I do. I do. It's funny. Yeah, I was looking at the Qs yesterday and even putting together some notes for this morning show. And yeah, the Qs were pretty much flat since April 2nd close, which is pretty incredible. Now, earnings have been better than feared. We've had a much more relaxed vol backdrop. I don't see what the VIX is doing currently. 8.5%. So that's probably going to see upward pressure. Rates have been much more stable as well. Sorry about this. So there's been a reason for optimism, but again, in my conversations, we're yet to see an all clear signal. And I think the end of the day, we're going to get more trade deals are going to happen, but isn't China really all that matters? I mean, until we get some sort of deal and unification between U.S. and China, I struggle to see how this doesn't remain an overhang on the tape. So some of the smarter PMs that I talk to or used to work with, I mean, their mentality is it's very tough to gross up in this type of environment, and they're more or less just trying to hit singles and doubles. And the times you try to stretch those doubles into triples is when you're going to get your teeth kicked in. Just look at this morning. Go figure. A little company like Supermicro comes out down 20%. Now you have NVIDIA, Dell, AMD. The whole complex is down 4 to 6%. And that's a problem. And then we're also expecting DeepSeek 2 to hit the headlines, within the next 5 days as well, which we all remember what happened, in late January to the U.S. AI complex. So there's some negative headwinds still circling some key tech names. We obviously have Meta, Microsoft tonight, Apple, Amazon tomorrow. I think Meta, Microsoft probably more important in my opinion. But the silver lining here with tech positioning is the cleanest it's been probably since entering 2023. That's the positive in my view.
Okay, let's go to media. Just on Netflix. I mean, it's going to be Netflix, and everyone else is gone. Say bye-bye. I mean, what's going on here? What's going on with media?
Yeah, I mean, I think I may have talked about it last time we were on the trade, on the show, like the perceived safe haven stocks, right? I mean, obviously, I think Netflix is off its highs, or maybe it hit fresh highs, but you are still seeing rotation into perceived, secular growth, non-tariff China exposed names. Netflix, Take-Two, Electronic Arts feels like a coiled spring. Check out that chart. It's closed the gap from a big sell-off in January. Roblox reports tomorrow morning. Another name where positive third-party data and checks there have been very good. And Spotify, I think you guys mentioned Spotify yesterday, down 8%. I think when we opened yesterday, and it rallied. I think it closed down 3%. But for a stock that's been on an absolute run, I say that's pretty impressive. And there was clearly some institutional support in Spotify in that sell-off. So I think guys are still trying to keep it simple, and don't try to be a hero, because again, if you try to gross up at the wrong time and then a wrong headline hits, you can see your year be completely evaporated very, very quickly.
Were you listening to us yesterday? How did we do?
Pretty good, I thought. I caught part of it. I mean, earnings have been an absolute, just chaos in the morning for me.
Right.
Another sub-poc. I think again, cybersecurity. Keep it simple. Like increasing, Gen AI is going to continue to adopt, innovations on that front as well. CyberArk, Rubrik. are probably two of my favorite names. I think Christian was talking about Checkpoint the last time I was on. But yeah, like keep it simple. But I think one thing that sticks out to me coming into today, software's outperformed semis by 5%. And until we get some sort of trade, clarification with China, semis still remain ground zero for what's going on. And people just don't want to own them. They'll trade them, but there's just not any willingness to step in and defend them.
Is there a possibility that we could turn around, though, with the big four reporting in the next 48 hours? We got Microsoft and Meta tonight, and obviously Amazon and Apple tomorrow. Is there that possibility that they just don't say, like, our expectations low enough here, Joel? And we've seen this too. We've seen some examples where expectations are so low that the stocks actually rally. Is there the possibility that people are just expecting, maybe the earnings to not be great, and if they're pretty good, that this market could just turn around on the backs of Meta and Microsoft tonight and Amazon, Apple tomorrow?
That's a good question. I would say if the Qs hadn't rallied 16% off their lows, I'd say, there was a great chance. I bet 8, highly likely these stocks would trade higher T+1. But again, it feels like there's just so many cross currents out there. I think Meta could obviously calm it more than anybody. Zuckerberg, they're going to reiterate their capex, especially on AI. Zuckerberg, he was speaking with Nadella last night as well at LlamaCon, and kind of was how he expects like 30% of the coding at Llama to be done by AI. So I don't see Meta at all pumping the brakes on their AI spend. So that's a positive. Now Microsoft and Nadella, a little bit of a different story. Nadella's been pouring cold water on capex really since early February, and that has been an overhang on the group for sure. But I think the only thing Microsoft has it going for you, it's from a valuation point of view, it's pretty reasonable. There is capex visibility as your expectations have been lowered significantly. Is it going to be market moving? I don't know. I feel like it is different this time, so I'd say no. I don't think people are going to be jumping all in with the trade stuff in the background. And again, trade deals with Japan, India, when they do hit, are going to be much welcome.
When or if.
I feel like the market's been pricing some of that in.
All right, Joel Kulina taking the time out on a super busy morning here. Besides the earnings, the GDP, PCE, also the Fed messing around. Technology, media, and telecom. I will never forget that. Joel Kulina, thanks so much for coming on Pre-Market Prep. We will be talking to you again next month. Thank you, Joel.
All right, guys. Good luck today.
Thanks, Joel.
All right, bye.
Wow.
Holy
We're just
mackerel.
getting absolutely hammered here. Now it starts. I'm like, why was it so delayed? Like, why last night was the S&Ps just like shrugging off SMCI and shrugging it off? Like, I'm talking, it was an hour delay before we started.
Hour? This is 12 hours.
Yeah, I know,
14.
but even to get like the 20-30 handles down that we had last night, it took like forever. It's like, this is the most reluctant market to sell off. And that's why it's hard to like just come in here and say, okay, this is it. Yeah, now it's going to start going down. Because the buy the dip crowd will just come back in and buy the dang things back up again because they're like underinvested and they're scared that they've missed the bottom. I'm scared I missed the bottom. I bought some stocks at the bottom, but I'm still sitting 35% cash. And I'm like, because I sold everything I bought at the bottom, I sold it like 2 days later when we had the ridiculous 10% rally in the markets. So I'm like, I wanted to get back down there and reload, but I don't know. Tough market to call. Because you don't know, what's going to happen is the administration's going to come out, and talk the market back up. Like somebody's going to say something and like, oh, we got a deal coming tomorrow or the next day, or we got a deal. We're talking 17 countries. Deals are coming. That's what's going to happen. I mean, but you still are in the take the money and run market because, we were talking my Micron position, and I bought it at 70 and I'm like, it went up to 80 and it's at 79 and I'm like, do I sell it? Don't I sell it? We were talking about it in the room. And I'm like, I don't know. I can't decide. I'm like, it is to take the money and run market, though, and I'm up 12% in it. I'm like, I probably should sell it. So I sold Micron 2 days ago at 79. It's 73 this morning. You just seem to be rewarded for taking the money so continuously.
You know what? I think the STN room helped you out with that one.
I think so.
And also, I was thinking that day the market was rallying. And I was thinking, oh, well, the market's rallying every stock and then, has to go up. But you had the negative NVIDIA news about Huawei. So that that news came out on Monday. You still get some reprieve in Nvidia, but you never got back up to to the highs from last week. So that's what we're looking at. Let's we have the PCE. I see the PCE came out a little bit higher than expected. I don't know what that means for inflation expectations. I'm seeing this treasury news come across the board,
Well,
and
and TLT is your lie detector test. Is the sell-off for real? I would say, well, yeah, it's pretty serious in the TLT, and TLT has been rallying back. We've seen the TLT have a nice 5-6 day rally from 86 to 90. That helps stocks as well, because that's telling you longer-term interest rates are now trending down a little bit. They're getting a little more comfortable. We don't, it's losing that fear that the international investors are selling U.S. treasuries, which I don't know if there was any truth to that at all, but that's rumors were flying around there a week and a half ago about that. I mean, that's obviously not been the case. So now we're down here this morning, but not down much. I mean, we're down 60 cents. So it's not like we're, just falling out of bed and getting killed. We're down a little bit.
So a couple pieces of clarification here. With the GDP report at 8:30, we did also get the PCE that Joel is referring to. The core PCE reading was 3.5% quarter over quarter growth. That was versus an estimate of 3.1%. Is PCE a gauge of inflation? Yes, but it is also a gauge of stronger consumer spending. So
okay.
a higher level of PCE also is indicating that that households are still spending. So that is a little bit of a good and a bad here. The other thing that Joel was just referring to, the Treasury just after 8:30 a.m. released the quarterly refunding statement by the Assistant Secretary for Financial Markets. It's basically the bond auctions that are coming up here by the Treasury. Those were largely in line. I don't understand this stuff extremely well, but from what I can tell, those were largely in line. The one piece of information that I did want to cover, I'm just finding it here. Give me just one sec. The U.S.
Okay.
Treasury sets the quarterly refunding at 125 billion. That was in line with estimates. The Treasury did say that they will continue incremental increases in TIPS auction sizes. That is also as expected here. I mean, Joel, if I think you got a couple of good things on your radar here, Joel. But I also will just point out that looking at my S&P 500 futures chart, we were rejected at the 55.50 level. We have been trading in these 50 or 100 point intervals, and right as the GDP number hit, we were rejected at 55.50, and now we're trying to find a little bit of support around the 5,500 level. So we do have a couple of things that we should focus on here, but I'm trying to just look at what's in front of me, and we do have some price action in front of me, in my humble opinion.
Okay, yeah. I mean, I think that there's a lot of different factors going on right now, but the U.S. economy contracting for the first time since 2022 on the surge of imports, ahead of the tariffs. I think that's weighing on the markets. I think you got started off on a negative foot, yesterday at after the close, but once again, one tweet, we got a deal, one thing, and then you're scrambling. I'd love to see that tweet today and see a 50-point rally out of nowhere. But we'll see what happens, and always the markets provide us great information. Boom, Norwegian Cruise Lines. I mean, could you be comfortable going long NCLH after you saw the price
No,
action in
no,
RCL
we said
yesterday?
that. We said that too. I'm like, I can't be long NCLH after I watch what RCL. RCL comes out, beats and raises, and they still go down. I'm like, NCLH ain't probably gonna, even if they do that and they're going to go down. I'm like, maybe the bar is lower, but I'm like, no. So I'm like, absolutely not. I'm like, I can't be long NCLH going into the report or going even ahead of the report. I didn't want to do it. And here we are, gets hit, stocks trading down, the earnings, which just give them to you here too.
Yep.
Not going to be like RCL, not at all. So 51. So they missed. They missed on top, missed on bottom, slight miss. Guidance kind of in there. They affirmed guidance, so they held guidance, but they didn't. And RCL raised yesterday. But RCL that beat raise. This is a miss affirm. They're not going to go depth on that. So RCL simply the tape on RCL told you not to be long any of those stocks.
Okay. Carnival Cruise Lines getting hit as well. That's a big move for Carnival. I mean, kind of that one kind of gives you a warm and fuzzy feeling if you still own that one compared. Well, it's way off its 2025 high. So that's a look. Okay, let's
Let's talk AppLovin. I'm going to take over the lead here, Joel. So let's
sure.
talk AppLovin here for a second, because this obviously is getting hit here this morning substantially. It's down 17% here again. We get another, is this another short seller here? Edgewater commenting. They're trimming their estimates with, actually, that's not, I guess not Edgewater. I don't know if they're short seller or what they are, but it's commentary that's coming out here, and the stock is just absolutely crushed here again. So APP is down another 48 points. It seems like APP gets some life and then just has analyst commentary or, short seller report or something that just harpoons it again. And the stock is getting absolutely hit hard here, down 16.6% here, giving back, all of its gains from the last week and a half, filling the gap, coming back down near the lows. The take the money and run market continues.
Wow. I don't know what to say. I mean, we're off the bad news is we're down 16%, $47. The good news is that we're off the low of the day. I'll just do a quick I mean, I'm not shorting it down $47, but if I'm buying it, let's see, 200, 200, let's call it 290, 45. I mean, if you thought you wanted this back, if you wanted a gap fill here at 243.56, you're getting it. It also, also combines with the 50% retracement on the day. You don't know if someone like Michael Pachter is going to come out and defend it again. But big drop there for APP here in the pre-market. Do we want to try and sneak in one more earnings, Dennis, or should we just?
Yeah, and I mean,
Yeah,
there's a million earnings stocks.
I
There's
know.
200 companies that reported here today, so it's always, difficult to just jump, But let's go to Garmin, GRM, and this is down another 8% here too. Another ugly one that's come back a long ways from the lows again. It was kind of sitting in the middle of nowhere, but it's trading down substantially on their report. So I always think of them as GPS, but they do so many other things, I guess, as well. So they missed $1.61 versus $1.67, 1.53 billion versus 1.5 billion is a beat on the sales. The guidance is kind of just in there. They affirm it, 780 to 7 versus 792. So right there. So the guidance was fine. So everything was fine. But again, you're reporting on the worst possible day here now. I mean, maybe when they reported it wasn't that bad, but it wasn't a great day. We were down like 25 handles when they reported. Now we're down 70. So now it's like complete ugly, and they're just selling stocks. And even, like Caterpillar, which was all over the place here, is giving back a lot of its gains here too. It's like this, the overall macro tape just dictates like these moves. Like when they're wishy-washy on guidance, it's like, are we on have a good day? Because, think about the airlines, a couple weeks ago, they're all rallying, even on bad news because the markets were just going higher. It's like still what's driving the bus is the overall market here, and the individual moves. Yes, they're there and stuff like AppLovin, but they're exaggerated on these down days. So you don't want to be reporting bad news on big down days. They really hammer you.
You want to get out of the way of the step down seller. I'm not sure he's done yet here. We're at the lows of the pre-market session. If you thought to miss the move, you're looking at halfway back right here, this 185 to 187 area. Also a daily low just under that at 184. So potential support, but you got to mop this guy up here, this step down seller. Okay, we didn't get to cover all the earnings, but we got some more time to do that. Tomorrow's show, we're going to bring on Jim Tassoni. Jim's, he wanted a rally to sell more. Well, we'll see if he did sell more into that rally. If you want to join us in the STN room, we are going to get Mark Chaikin on and get his thoughts on the market. Dennis, I know you wanted to buy a little bit higher. We're coming into Monday's low. This is already a big move. Any final tips here to wrap up the show?
Nope, saving them for the STN room.
Okay. All right. Thanks for joining us on Pre-Market Prep.